Hello and welcome to another episode of 90-Second Equities, where I'm delighted to be joined by our head of UK Equities, Matt Bennison. Matt, for much of the last few years, the FTSE 100 has outperformed the FTSE 250. However, in Q2, we saw that trend reverse with the FTSE 250 starting to outperform the FTSE 100. So Matt, my question to you is, what is driving this resurgence in UK mid-caps? 90 seconds, watch that clock.
Yeah, thanks, Chris. And I think there's a few key drivers behind the recent UK mid-cap performance. I mean, firstly, and probably most importantly, it's valuations. UK mid-caps have underperformed large caps for several years now, and in many cases were trading at significant discounts, despite continuing to deliver solid operating performance. In many cases, the underperformance had been sentiment and flow-driven valuation derating, not a fundamental deterioration. Even after the recent modest tick-up, the FTSE 250 is trading on around 12 times forward earnings, below its long-run average, which is typically around 15 times, and versus UK large caps that are typically around 14 times. Secondly, M&A activity. We've seen significant increase in takeover activity across the UK, particularly further down the market cap spectrum, where valuations remain attractive. And this has helped to highlight the value available within UK mid-caps and has acted as an important catalyst for investor interest. If public markets do not appropriately value these businesses, then corporate and private equity buyers will take advantage. And the level of mispricing is so stark in some cases that many of the bid premia have been over 50%. And thirdly, the market has started to broaden out. In the last couple of years, it's been driven by a narrow group of large cap sectors, such as energy and defence, which led the FTSE 100 to outperform the FTSE 250 by around 16% in the 2 years, up to the end of 2025. However, during the second quarter of this year, improving sentiment towards UK domestic assets more broadly and a broader risk-on environment supported a recovery, with the FTSE 250 returning around 10% compared to around 4% for the FTSE 100. But look, it's important to remember that our edge as stock pickers is not in making a call on the FTSE 100 versus the FTSE 250. But on identifying fundamentally mispriced businesses and constructing portfolios that allow stock selection to drive portfolio returns across the market cap spectrum. Based on the above, it will not surprise you to hear that we continue to see a great deal of fundamental mispricings in the FTSE 250.
Thanks, Matt. So while large caps have dominated UK market returns for much of the last few years, recent mid-cap performance has shown that market leadership can change, and that one way to manage this is to have a portfolio that is well diversified across market caps that can capture this performance. Thank you for joining us, and we'll see you next time for another episode of 90 Second Equities.